So the Bank of Canada announced another 0.25% rate cut yesterday, bringing their policy rate down to 3%. Now, this might seem like a small little change, but the bigger story here is the total effect that these rate cuts have had over the last year. We really need to compare the mortgage environment from 2024 to 2025 and show you the dramatically improved landscape for borrowing money. This is good news for homebuyers, businesses, and the overall economy. So let's take a little look about why this cut really matters. Over the past year, the Bank of Canada has steadily reduced rates to combat any economic slowdowns. The cumulative impact is really what matters. Compared to last year, the borrowing conditions are now significantly more favorable. Mortgage rates are coming down, and that shift makes homeownership more attainable for many more buyers who've been priced out in the recent years. Now, there's still some problems in our market, the big one being new construction. While lowering borrowing costs will likely increase demand, supply remains the big concern. New construction of the type of homes that people really want has essentially stalled to nothing in the past 2 years. Builders have been facing high costs, labor shortages, and overall uncertainty about their industry, leading to fewer new homes coming onto the market. So, this supply gap puts additional pressure on the resale market, where we're expecting competition to be pretty strong this year. Now, it's going to really depend on what segment of the market you're in. Not all parts of the market are going to respond the same way to these changes. The most desirable homes, those in great locations with move in ready features and at the price points that people can actually afford, are likely to see strong demand, including bidding wars and escalating prices. However, there are some less desirable segments of the market, specifically investor focused properties, properties at the highest price tiers, and properties that come with high condo fees. They're all struggling as affordability remains a challenge for buyers. These buyers are being more selective and they're prioritizing value and quality over speculating in the real estate market. So, what does this all mean for you if you're planning a move this year? Well, on the buy side, this is an opportunity to secure lower mortgage rates and get into the market with a better financial plan for your purchase. However, competition for these well priced homes is going to increase. So, you need to be on your toes. Now, if you're a seller, the number one thing that matters this year is your pricing strategy. Homes that are well positioned and priced appropriately are going to sell quickly, while homes that are overpriced or in one of these less desirable market segments may still see a long time on market and lower offers. Now, the latest rate cut is a step in the right direction, and further rate adjustments are going to continue to shape the real estate landscape. We do expect the variable rate to continue to come down throughout the year. And now, with the latest announcement, we do also expect fixed rates to start coming down throughout this year. So, if you're considering buying or selling, it's going to be very important to stay on top of this information and get quality real estate advice and mortgage advice. If you have any questions about how these rate cuts might affect your plans, you know how to get a hold of me. All my information is right in the video description below. And stay tuned to this channel for more news about Canadian and specifically Brantford real estate.